Right, we continue with our coverage of the monetary policy. In fact, the RBI keeping the rates unchanged, maintaining the accommodative policy, and on the back of that, we're seeing the markets also, the Sensex crossing the 45,000 mark for the first time. RBI also raising the GDP forecast for FY21. So let's talk about all of that in detail. Joining us now on ET Now is Mr. R. Gandhi, as well as PNB's MD and CEO, Mr. S Mallikarjuna Rao. Good morning, Mr. Rao. This is Ruchi Bhatia. If I can come to you on your first thoughts on the monetary policy action by the RBI today, maintaining their accommodative stance, not just for this year, but also for next year. But important commentary definitely coming in on the inflation front, where the RBI said that the inflation is going to remain sticky, very close to the upper end of the inflation target that has been set out. However, as far as growth is concerned, that's going to be, a singular focus for the RBI.
That's right. The policy declaration has been on the expected lines, and more importantly, the commitment what RBI had shown in the policy of October, they have continued here. Even though there are a couple of issues probably would have been bothering RBI. One is related to the inflation, another is heightened position of liquidity available in the market. Liquidity available in the market is predominantly because of the growth in deposits at around 10%, little over 10%, and the credit growth only restricted around 5.7 to 5.6%. These are the main reasons. However, in order to continue the sentiment and ensure that the rates in the market are maintained, because there is an expectation of credit growth in December and January. So in order to hasten that process, RBI has stick to the stance, which is a very welcome decision at this point of time. We have seen growth in the mid-corporate segment, around 16%. We have seen growth in services sector. However, it is the critical mass that comes from the corporate growth. So we are yet to see the demand coming up for the corporate growth. Regarding the government utilization of the funds from the credit, we expect some withdrawals to happen in December and January. So these are the main reasons why probably RBI continued with this stance, and it is a good stance from the industry perspective.
Right. While the a lot of measures have been announced as far as extending the ECLGS scheme, the TLTROs for the stress sectors as well, in line with the ECLGS scheme, I want to get a sense from you, Mr. Rao, on basically the big fear is that once the relief measures from the RBI end, we will see the souring of and the worsening of retail loans as well. So is that a fear that you also share? This was something that has been recently spoken about by the CEO of Axis Bank as well.
See, there are two important things. One is extending the government that is guaranteed loan to the stress sectors between 50 crores to 500 crores, as was declared by the government of India recently, is a very good move. Now there the restriction is the lending can happen up to 20% of the outstanding as on 29th of February. Now by opening a window for TLTRO, RBI has brought another opportunity for them so that they don't fall into the category of restructuring. Whatever problem they had in the stress sector, they can come out of the problem without even resorting to get restructured. It is a good window open for the stress sector. Initially, when the RBI came out with the restructuring circular in the month of August, the anticipation in the industry was probably, or the bankers were probably, 4% of the credit book could go under restructuring, whereas as of today, if you look at, it is completely lower than that. So by opening a window like this, it is a wonderful opportunity for the stress sector to come out of that in a defined period of time and to move forward. So with respect to credit demand to come, while I repeat my statement that we are yet to see the demand in terms of industry coming up with new projects, but there is a demand seen in terms of infrastructure segment, road segment, which banks have been lending in the last 3 to 4 months' time.